Welcome back, everybody, to the newest episode of the New York Only podcast. I am your host, Matt Harms, founder and principal broker of the Time Away Realty Group. And today I am joined by Tim Madden, insurance expert extraordinaire. How are you, Tim?
Doing well, Matthew. How are you?
I'm fantastic. Thank you for asking. So I got to tell you, it's funny because, at least for me, real estate seems to, a lot of people think it's a sexy term. And then you get insurance and people are like, oh, I don't want to talk about insurance, right?
Yep. Yeah. Insurance has been called a lot of things, but sexy is not one of them.
No, not unless you're insuring something sexy. But even then, there's still the thought of paying money for something that you never want to have to use.
Sure. Yeah, absolutely.
But unfortunately, real estate and insurance are kind of joined at the hip, though, right?
Absolutely. Yeah, totally.
I would love if you would tell everyone just a little bit your experience in the insurance world, kind of how you see it in terms of protecting someone's investment. Because we're here in New York. You're out in Pittsburgh now, right? But real estate's not too cheap in Pittsburgh either.
No, it's not. It's funny. Nobody ever grows up as a little one and says, I want to get into the insurance industry. Even if your parents maybe own an insurance agency, they usually still don't want to do that. So, my father is a retired NYPD detective. My mom was a nurse. So I never really grew up in this household with any type of entrepreneurial spirit. I was going down to, I went to college at Florida State my last semester there. I was valeting cars and I valeted cars for this recruiter for an insurance company. And she said that she needed to fill spots in an office in either Phoenix, Arizona or Denver, Colorado. And I was like, wow, those are two pretty sexy places. I was like, I'd love to go there. I don't know anything about insurance. I don't even know what type of role it is in the insurance industry, but let me explore this a little bit. So I got the job. It was for a claims adjuster role. And like I said, I knew nothing about insurance. And but what I did find out within 2 weeks was that I was not a claims adjuster. Unfortunately, claims adjusters are those who have to deal with people with in their worst moments, right? And sometimes the insurance policy comes into play to rescue them, and that's great, but it's still not an ideal situation. And then sometimes you're the bearer of bad news when you find out, hey, there is no coverage for this. And so I had an obligation with this company to be out there for 1 year. And so I gave my notice 2 weeks before that 1 year obligation was up. But I said, you know what? Insurance is interesting. I just think I'm on the wrong side of it. And I would like to educate people about their insurance policies, because as the claims adjuster, I was finding out many times, unfortunately, that the person who had the accident had no idea what they had. They just assumed, hey, it's a piece of paper, it's going to take care of me. And that's not always the situation. So I was like, well, I'm going to stay in the insurance industry, and I'm just going to put myself in a position where I can educate people and make a living off that. And that's what I do. That's the role. I am an independent insurance broker. I don't work for any one particular insurance company. I represent many. And when it comes to things like real estate, which is one of many things that I insure, there are a lot of different properties out there, and there are a lot of different insurance policies out there, and there are people out there with different needs. So the first thing I address, and unfortunately, today's marketing world has really done a disservice to the insurance industry. Everybody thinks, because of the commercials they see on TV, that it's who makes you laugh the best has got to be the insurance company I'm going to make my next phone call to. There's no, differentiators other than, who's got a better mascot or logo, which is quite sad, because insurance policies are vary. And, even within companies, I could provide somebody with an insurance policy from, XYZ company. But there is like with like with a Acura, right? There are different trim models in a car. And so there are different trim models and insurance policies. And so my biggest suggestion to people, especially those in the real estate world, is understand the details of your policy. And like we mentioned earlier, insurance isn't sexy. Even really, really, really bright people out there don't know anything about insurance because they don't want to know anything insurance on that. And I understand that. So if you're going to have to go through the details of a policy, do so with an independent broker. Trying to piece together a policy on your own online, or doing so with a call center representative who's got no accountability to you after that phone call is over, is really really doing yourself a disservice. So my recommendation: do a thorough needs analysis first, and then when your quotes are ready, go through a review of all those quotes, because just taking a look at the bottom line and saying, okay, I'm going to choose this policy because that's in my budget, or I'm not even going to consider that because it's not in my budget, really isn't the best way to do that, because that will bite you in the behind eventually if you don't know what you have.
So I'm glad you brought that up, because one of the things I always find to be interesting as a real estate broker and as a real estate investor is real estate, for by and large, I would say 95, maybe more percent of the population. I don't have a statistic on it, but it's the biggest purchase they're ever going to make. And it may be only a one time, right? That your first home, maybe your only home.
Right.
Depending where you are in the world, in the country, it's going to be amongst your largest purchases ever. And for most people, it's the largest part of their equity in their estate, right? As you grow older, that home is your asset. And it's
Right.
one of the biggest areas where you find people all the time just trying to get the cheapest possible policy.
Right. Right. It's so silly. Their biggest asset, and so they're just gonna insure it with something that they view as a commodity. Um, and like I said, not only do you need to do a thorough review starting the process off, as far as a needs analysis goes, and then a follow up once the quotes come in, but periodically after a policy has been put in place, I recommend doing a review with an independent broker, because so many things have changed year over year. I mean, look at the last couple of years, right? I mean, not only was it COVID, but you've got inflation, and so many other things that people think, well, I just stuck my insurance policy in the drawer and just left it there, and it is what it is. But it needs to be as fluid as your life is. For example, if the cost to rebuild my house on my insurance policy is $750,000, and that was determined in 2016, that
It's
dwelling
probably
amount.
it's probably $1.25 million now, and God forbid something happens, you're not gonna. What are you gonna rebuild? 70% of the house?
Right. And with certain insurance policies, they'll have a guaranteed replacement cost and you'd probably be fine. But not all insurance policies do. Many don't. And so, and the ones with the guaranteed replacement cost are probably more expensive policies, because they've got, nimble features that are nice to have. But if you didn't want to pay for them, I get that. The job of an independent broker is to tailor a policy that fits the needs and the budget of the person who needs to insure their property. But just as long as everybody knows what's on the table, and you're constantly reviewing, being proactive, because the last thing you want to do is find out the hard way when your house is either burned down to the ground, or a tornado has ripped through your town and taken off your roof. I mean, that's again, I've been there as a claims adjuster, and it's not a pretty sight.
I've been there as a property owner, where unfortunately we had a policy that just didn't cover something that happened to our roof, and it wound up setting us back a pretty penny in terms of relocating the tenant that was there, because we were not covered for lost rent. There were just a few different things. That policy was before I knew you, but it's really just there's something powerful to be said about telling people what they need to hear and not what they want to hear. right?
Right.
How many agents are out there just saying, oh, well, what's your budget? I'll find you something for your budget, knowing that God forbid something happens, they're literally not going to be covered for anything.
Right, right, absolutely. And I'm at a point in my career where if somebody reaches out to me and wants some quick, quote, hey, they're not willing to give me the time I need, I won't do it because, I'm accountable. And in God forbid that there's a claim and they needed coverage for something that they didn't have. My errors and omissions policy is going to be triggered, and it's so funny how if your accountant wanted to sit down with you and talk to you about a tax strategy, you'd give them as much time as you wanted. Same with your attorney,
Financial advisor.
right? Financial advisor, your attorney, your doctor. But this whole, hey, 15 minutes is all I'm going to give the insurance broker. Again, back to your point earlier about probably the biggest asset they're ever going to have is just, it's so crazy. It's absolutely nuts. And for those that want to go, because, listen, I understand the world that we're in right now. People, we're the information age, and okay, I'll just, Google, common insurance terms that I should be familiar with, and I'll just go build my own policy on some company's website. There is no cost savings whether or not you go direct to an insurance company or you go through a broker. Really, the only difference is if you go direct, that insurance carrier is just increasing its profit margins because they're not paying a commission to an independent agent. So it doesn't even really come out of the pocket of the consumer. So it's so foolish to not rely on a professional who's basically giving you free advice.
Right, or to put in the time that they need to do their job, right? When clients are looking for a mortgage for a property, they don't tell the mortgage broker, I don't have time to get you my tax returns and my pay stubs, because guess what? You don't get it, you don't get the loan.
Right, right, exactly.
One of the other things I wanted to touch on, because I don't know if you see this a lot, but I found it interesting that a lot of people only get or believe they only have homeowners insurance to satisfy the bank's requirement when there's a mortgage on their property. And once it's paid off, it's like, well, I don't need to have insurance now because no one's making me. Right. It's not like car insurance where, at least in New York, you can't own a car without insurance.
Right. No,
if
right.
you own your property free and clear, you absolutely don't have to have insurance on it.
Yeah. Yeah. And, because the mortgage company's only interest is in the rebuilding of the property, right? Other than that, they don't care. So, there are many, and that's what everybody focuses on when they're looking at a property policy, but they don't realize that there are many other components to the policy that are as important as the cost to rebuild the structure, like the belongings that are inside. Well, the lender doesn't care about that because they don't own that. So they don't have an interest in that. So they'll let you do whatever you want as far as that stuff goes. If they have to, if a property policy lapses and the mortgage company places a policy for you, it's not going to have coverage for your belongings. Your
I'm going to
furniture.
ask you this question just because I know the answer to this and I don't know the particulars of it. But let's just say Joe homeowner thinks that, well, I have a homeowner's insurance, so my house is covered. But Joe homeowner owns $1 million comic book that no one knew about because they got their quote online and they're like, well, I'm covered. My house burnt down. The comic book is in there. I want my $1 million. Are they going to get it, Tim?
Absolutely not. No, there are, the contents coverage on a policy, specifically a homeowner's policy, is there to cover the everyday average items that you find from household to household. Your clothing, your furniture, your electronics, the things that the standard individual household has. But for rare, unique items, jewelry, coin collections, wine collections, card collections, comic book collections. If there's any coverage at all for those items, it's very minimal. And I'm like, for example, jewelry usually has, about $1,500 in coverage. Well, I mean, if you got an engagement ring for a spouse, that's not going to get you very far. So, the personal property coverage is definitely something that needs to be reviewed. And there are other components too, like loss of use coverage, right? Like how much, and this goes for owner occupied houses and investment properties, right? Like how much income would be lost if there was a claim that was covered and the tenant had to move out, or for the individual that can no longer live in their own place, right? How much is available to them if they have to temporarily live somewhere else? And where do they want to live? I have had a customer in New York City that, wanted to stay at the Palace Hotel. And they were in a co-op in Manhattan, and because there were many other units, it was a massive fire, and the building was shut down for a long time. The FDNY wouldn't let people come in until all these things were brought up to code, and they wanted to stay at the Palace. And so they did stay at the Palace until all of a sudden the insurance company said, that's it, you've exhausted your limits. Now there are some insurance carriers out there that have a defined limit, and there are some that have a bottomless limit. So again, it all depends. My favorite is the liability portion, because people think, especially when it comes to homeowners insurance, that the liability coverage is only providing them with liability in the event that something happens on the property. Maybe a dog bites, a child, or there's a cocktail party and, somebody trips over the coffee table and, falls and breaks their arm. And those are, the liability coverage could come into play there, but it also follows the owner while they're not at home. So for example, let's say you've got somebody on the Upper East Side of New York who's going for a bike ride in Central Park one, beautiful, Friday afternoon, and a squirrel cuts in front of them. They don't want to kill the poor squirrel, so they veer to the right, and in doing so, they collide with someone who's going on a jog. And maybe that person going on a jog is a orthopedic surgeon at the hospital for special surgery, and they fell when you hit them with your bike, and they fell and they broke their elbow, and now they can't be the surgeon that they once were. Well, they're going to hire a personal injury attorney and go after you. Your first layer of protection, believe it or not, even though it happened in the park, not in your residence, is your homeowner's policy. A lot of people don't realize that.
I didn't realize that either.
Yeah. Yep.
Although I think that's probably a question on the insurance test.
No, because that's like a real world example, and nothing on the insurance test was practical. So
This is true. There's nothing on any test that's practical. I think I passed my real estate broker test in 4 minutes.
Yeah.
And there wasn't a single thing in there that's helped me in my day-to-day life.
And the state just wants you to make sure you're aware of what you could be fined for when you do something wrong. So they could say, well, we told you, now you know.
They also want your testing application fee and your renewal fees and your continuing education fees.
Yep.
Tim, what's one of the craziest insurance things you have ever seen?
One of the craziest insurance things I ever saw, a fraternity house was burned down. Yeah. And
it sounds horrible.
Yeah, it was really interesting. The fraternity didn't own the property. They were developing across the street. And so in the meantime, they were leasing a house that had, 20 rooms in it. And there was a fire. One of the residents had a candle and a blanket fell off the bed onto the candle, which was lit the night before and, never went out. And so there was a pretty massive fire, and the student could have put the fire out pretty quickly, maybe having lost blankets in the mattress, but the fire extinguisher was depleted. The fraternity brothers had gotten into a fire extinguisher fight a couple weeks before at 3 a.m, and so there wasn't a working fire extinguisher in the house, and so. And fortunately, nobody was killed. There were about 6 members of the fraternity who lost contents, lost, significant, the clothing, the computers, their school books, and some memorabilia. And everybody assumed that the insurance company that was going to pay would be the insurance coverage for the individual who lived there. Well, the student's parents, because that's what happens most of the times. You know, a student would still have coverage away from home while at college, and so all those other students who weren't negligent were going to try and subrogate. Their insurance company was going to subrogate against the at-fault person, but it was actually deemed that the landlord was the at-fault party. Even though the landlord didn't light the candle, the landlord had failed 4 out of the last 5 fire inspections. So, you know, whether or not, you know, that should have been, you know, the case, you know, one of the beautiful things about having an insurance policy is that the insurance company defends you, and you let the insurance companies duke it out against one another. And so, you know, what was really interesting is that that landlord had lapsed their policy. So they had to pay out of pocket to remodel the house. It was not really a gut renovation, but it was pretty close. And then and so the gut renovation happens, and the landlord gets a policy in place. The work wasn't all completely done, and then another fire happened, which they said was due to a homeless person who was living in the house while the last stage of the renovations was being done. So yeah, lot going on there in that particular situation. So
Moral of the story is make sure your policies are up to date.
and have a risk management program, right? That investor to, you know, listen, insuring a fraternity house is its own, you know, can of worms, right? But you've got to make sure that you've got risk management procedures in place to prevent losses. And number two, if a loss occurs, you know, what you're going to do to keep those losses down. And that's what a lot of people don't realize, especially on the commercial side of insurance, is if you've got a good risk management plan in place and you are proactive, a business owner or property investor can, with their insurance broker, submit an application to the insurance companies and get significantly better pricing. You know, we might have the same let's say, you know, we're on the same street and have, you know, almost the same blueprint of a house. You're on one side of the street, I'm on the other. If I've got better risk management features and we go to the same insurance company, we could have completely different pricing just because one of us is being proactive and one of us is not.
Interesting. Very similar to the concept of auto insurance, where the better driver usually gets the better pricing.
Yeah, absolutely. And you know, while we're on the topic of, you know, real estate, you know, insurance, property insurance, you know, a lot of people think that putting in a claim is going to trigger the same effect that it usually does with auto insurance. You know, most of the times when an auto insurance claim is filed, there's going to be an increase in premium. And everybody or most people assume that's going to be the same when it comes to property insurance, and that is usually not the case. Insurance companies, what your premium might go up a very small amount because you're no longer getting a claims-free discount. But we're probably talking about like somewhere between 50 and $100. Insurance companies understand that property claims happen. And if you've got, you know, one large claim every 5 years, that's not going to be a major issue. However, what they look at is frequency. And if you've got every other year, you've got a $5,000 claim here, a $5,000 claim here, then the question isn't whether or not how much your insurance is going to go up. It's just that you're just going to drop you. But a lot of people have reservations about putting in a claim for a legitimate reason because they don't want their insurance to go up with property. And that's usually just not the case.
Got it. Thank you for clearing up that myth, because I know everyone always panics when it comes to, oh my God, I got to call my insurance company.
Right. Right.
In
Right.
fact, if you're smart, you'll call an independent insurance broker, right? Because that's one of the differences in working with a professional, much like working with a real estate broker versus trying to sell your home on your own or walk into open houses on your own. You have someone who can guide you and is there when you need them the most, not just when it's time to get paid.
Right. Like I said, earlier, an insurance broker can put together a risk management plan to help get credits. And they're shopping the insurance around, right? So an independent broker's got access to many companies. So those are two valuable things. But to your point, since they don't represent a insurance company, they represent many. The broker's primary responsibility is first and foremost to the policyholder. So if a claim is going to be submitted, you have a conversation with your independent broker and say, first off, should we submit this? And we could take a look at, past claims history, and what the deductible is. Does it make sense to put this in? If we are going to put it in, what's the narrative going to be? Let's talk about this, because there are no one claim situation is ever the same. And so, another thing too is, unfortunately, some claims aren't black and white and they fall in that gray area. And so to have a independent broker who doesn't work for the insurance company there, helping you have a conversation with the insurance company is huge. Plus, if the insurance company doesn't want to upset the insurance broker they're working with, because that insurance broker has got a book of business with them. And if the insurance broker feels like that the insurance company has handled the claim poorly and done their mutual client wrong, they'll just move their entire book of business. And so the insurance company knows that. And they say, okay, well, should we really nickel and dime this policyholder over this, particular claim, because this broker might move their $5 million book of business from us to somebody else. And so now it becomes, does that make sense?
Right. Whereas an individual policyholder has little to no leverage against an insurance company. They don't care if you take your $1,000 a year policy and go somewhere else.
Right. And listen, and most insurance companies do the right thing, but there are insurance companies out there with different reputations, So, and again, that plays into the pricing, right? Okay. You might not be willing to pay 1.5 times, but you might roll the dice with an insurance company who does kind of nickel and dime you a little bit more at claims time, where there are other insurance companies who just show up with their checkbook and they're like, here you go. We'll sort out the details later.
Absolutely. Tim, if anyone listening wants to get in touch with you to review their policy, talk about new policies, insurance questions in general, how can they do that?
I'd say the best way is LinkedIn. I'm always on LinkedIn. I check my messages often. You could find me at Tim-Madden-Insurance. I believe that's my LinkedIn handle. My email address is tmadden@scsai.com. And yeah, always on LinkedIn, always happy to help, whether or not someone has a question, about a claim they're going through, or, coverage issues, or, things that they're worried about. Always happy to help. And, and it's never going to cost them anything.
Fantastic. Tim, thank you so much for your time and sharing this valuable knowledge. For everyone listening or watching, you just heard Matt Harms and Tim Madden speaking about the importance of insurance in your real estate endeavors. I've personally done a lot of business with Tim, and I highly recommend reaching out to him. As he said, it doesn't cost you anything. His contact information will be in the show notes. Always appreciate you supporting our guests. You could also reach out to me directly for any questions, matt@timeawaygroup.com. That's Matt with 2 T's. And we'll catch you all in the next episode. Thank you so much for tuning in.
Thanks, Matt.
You got it, Tim. Thank you.